You got to make it all. Hey, so not gonna waste too much time. We're gonna continue with what we're doing. Those who are coming, they're gonna find us moving, right? Because we don't have a lot of time, and I wanna try and cover up everything that I need to do with you guys.
Yeah.
We don't have enough time. So as I was still explaining right here on GBP, I'm just gonna finish up what I was explaining. Then I go into BTC. I wanna try and do a top down analysis starting from a bigger time frame up until to the small time frame, right? I'm gonna try and do that quickly. So as I was still explaining, right? So this will then be an area of demand, right? This will then be an area of demand right here, because we had the first touch, second touch, third touch, fourth touch. This was an area of demand previously, right? Now, when the market breaks down, they come back into this particular area, they reject, then they start going down. Then this particular zone, it is then turned as an area of what? As an area of supply. Now, I need you to pay attention to something, right? After the market broke out, there is something that they are doing. So they keep on creating lower lows, which you need to be very much open-minded when you're trading the market, right? If you look at from previously, so this thing came from previously from this point, right? It started right there. It started right there. The market constantly started doing what? Creating some lower lows. So if you can see, I could definitely tell you that they were preparing this area which the market was going to break and start moving towards or aligning with. Because this is an area of supply. Some of you call it an area of resistance, right? But this is not an area of resistance. I'll tell you some other time. Why am I saying that, right? Now, when you look at here, every time when the market goes down, they will come back, create the higher high, higher low, higher high, higher low, higher high, going back into that zone. After that, they break the structure, they start creating lower lows, lower high, lower lows going to the downside direction. They change the structure again, creating this higher high, higher low, higher high, higher low, going back into that zone. Change the structure again, back again, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, back into that particular area of interest, which is an area of supply, right? Now, this is what I wanted to learn. I wanted you guys to learn that when the market is creating the market structure, there is a certain particular area which the market is going into, which you need to pay attention to. And every time when the market gets into this zone, the market will definitely communicate with you as to if they're going to continue to break to the upside direction or they're going to continue to go to the downside direction. Now, I'll tell you some few communication that I'm going to pick up. So we've got a tweezer top. A tweezer top is a reversal pattern, which symbolizes that what? It symbolizes that bearish movement is about to begin at a particular movement, right? Now, we've got a doji candlestick right here. After the market broke out, when they were coming back to retrace, so we've got two factors of confluence. We've got this rejection that you're seeing from here to here. There's a rejection which symbolizes what also? It symbolizes that the buyers were trying to break the price from that particular zone or from that particular area of interest. Then they got rejected because why? There's more selling pressure in this particular zone. That's the first factor of confluence. Now, the second factor of confluence is an indecision candlestick, which is a doji candlestick. It falls under the indecision candlestick, right? Now, another factor of confluence will be a bearish hammer-pin bar. A bearish hammer-pin bar, it falls under a reversal communication as well. When the market approaches this zone, it was simple telling you that there's going to be a continuation to the downside direction. But if you don't know all those things, you're never going to understand. The last one, it will be a bearish hammer, a bearish engulfing, right? The bearish engulfing, is this 1, 2, 3 candlestick, and then the red one engulfing these two candlesticks. So is this what's happening, right? Then the red one that is engulfing the other one. That's a bearish engulfing, as you can see right there, right? I think I'm done. I've explained enough about the supply and demand and how do you identify how you're going to find your entry and how you're not going to find your entry, right? Now, let's quickly go into BTC USD so that I can do the top-down analysis for you. I'm going to combine the market structure. I'm going to combine the supply and demand. I'm going to combine your I said market structure. I'm going to combine also the type of trend as well. And I'm going to combine the pattern as well, right? To show you how you're going to find an entry, how you're going to sell at some point, how you're going to identify if the market is going to continue to go to the upside direction or it's going to continue to go to the downside direction. But I'm going to try to be quick because I want to make sure I cover up everything, right? Okay, so this is the monthly time frame. So when I do what we call a top-down analysis, we're basically going to start from the monthly time frame, and from the monthly time frame, we're going to drop up until to the 30 minutes time frame, right? Now, from the monthly time frame, if you look at here, we've got an area of interest right here, right? We've got what? We've got an area of interest, which the market previously has done what? Has been tapping into this zone, right? What was this zone previously when the market was tapping in? Was this a supply or was this a demand? I want to know that, if you guys still remember. Was this a supply or was this a demand? Someone says it's a demand. I guess you didn't catch it. What is a demand? What is a supply? You must go and re-watch the video. Okay, so this is the supply zone, right? So every time when the market comes into the zone, they do what? They pull back. So they came back for the first time, they pull back. They came back for the second time, they pull back, right? And then they come back for the third time. Now look at this. So the first thing that they do when they get into the zone, what do they give you? What is this candlestick formation? What is this candlestick? This one and this one. What is this two candlestick? The green one and the red one. Someone says these are trees at top. Correct. These are trees at top, right? After these trees at top, the market was telling you that I'm not going to break now. Because trees at tops, they follow under what? They follow they fall under reversal patterns. So after the trees at top, look at what the market did. It went down to this point. It was communicating with you to know that I'm not going to break now, right? After the market failed to break at that particular time, what did they do? They rejected. A rejection, it's also a factor of confluence to tell you that the market is being rejected from selling, meaning why? There's more buying pressure. Now, as they were rejecting, they ended up closing with what? With some two bullish hammer-pin bars. What does two bullish hammer-pin bars means? What does a bullish hammer-pin bar means? A bullish hammer-pin bar means in the market. Come on, let's move, guys. What is the bullish hammer-pin bar in the market? It's a reversal, right? It's a reversal. You're definitely right. So look at this. After that, the market did what? Continue to go up. Now, as they broke to the upside direction, they then created a higher high. And then they pulled back into that previous zone where they broke the structure to create what? A higher low. Now, after they created that high low, what do? They go and create a new high high. Now, before the market reversed from this point, they communicated with you. The same way that they did here, they gave you some two rejections. I think it's three rejections, right? And then the last candlestick, it was a doji candlestick, which was telling you that there is an indecision between the buyers and the sellers. Now, let me give you a simple practical example, right? If the market is creating some higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and then when we get at the top, and then the market then start doing something like this, what does that tell you? The bias has been dominant. We are trading on an uptrend where the market has been constantly taking out the previous high, taking out the previous high, flexing their muscle to tell you that we are in charge. Right? When we get to the top and then the market they start doing something like this, what does that tells you? Likely to go up? No. This will then be called an accumulation. An accumulation. What is an accumulation? An accumulation is when the price has reached a point where it's going to change the direction. So it will accumulate the momentum before it takes the opposite direction. You understand what I mean? Now, look at what happened after. I was just trying to show you why am I saying we had some rejection. So we had multiple rejection at this particular zone right here, which the market was accumulating the momentum. And we have some bearish pin bars that were formed, right? So those bearish pin bars, they forms under reversal to tell you that there is more selling pressure in that particular moment. Because why? If you don't know how to communicate with the market, you're never going to know what these bearish pin bars they mean. And with the rejection at the top as well, they're telling you what? They're telling you that the buyers tried to push the price to the top, but they got rejected for one reason or another. Because why? This particular zone, it was an area where the sellers are sitting at in order for them to do what? To take over the price from the buyers. The first characteristic that you should look for, the constant rejection. Every time the market get there, it's rejected for the first time. Every time the market there, it's rejected for the second time. Every time the market get there, it's rejected for the third time. And it does not only just get rejected, but it is also forming some candlestick formation at that particular moment, right? After that, the market broke the structure. Where are they going? They're going back into the area of interest. Now, they are touching for the first time at an area which previously was used as an area of supply. Now, after they broke up, they created a high, 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 low, high, high. They're coming back into that zone to create what? To confirm the area of demand. Now, how many touches do we have at that particular zone now? We have 1, 2, 3, 4. This is now one of the most strongest areas of interest. Meaning every time when the market approaches that zone, you have to be open-minded. You have to be able to read the candlestick formation as to what is it that the market is doing. Because the market can still go to the upside direction and come back here. When they come here, it doesn't mean that because previously they turned back, they're going to turn back again. No. You must be able to read the candlestick formation as to if the market is going to continue to go to the upside direction or they're going to break this time and continue to go to the downside direction. So you don't tell the market what to do when you trade. You need to be able to do what? To communicate with the market through the factors of confluence that you are learning in the market. Now, let's quickly move. So as the market pulls back into that zone, don't forget that the structure is also broken, right? So on the bigger time frame, this is the previous higher high. And then this is the higher high. And then this is the previous higher low. And then the market broke, came back and create what we call a lower low. Where was the structure broken? It was broken right here. Now, when the market comes into the zone, what is the candlestick formation that we're getting that we're going to have a reversal there? What is the candlestick formation that we're getting? The market will always communicate with you. That's what I'm trying to prove to you. That the market will always communicate. What is the communication that we are getting here? That the market will reverse. Thank you, Prosper. It's a morning star. We've got a morning star. A morning star is a reversal pattern. We find it at the support or at an area of demand. Right? So this morning star was telling us that we are sitting at an area of interest. We might have a continuation to the upside direction. Perfect. So now, what are the factors of confluence that we have on the monthly time frame? We are sitting at an area of interest. We are sitting at an area of demand that the market just confirmed now. We've got candlestick formation, which is the morning star. Here are the three factors of confluence. Now, the last factor of confluence that we're going to have, it is the moving average. I make it sounds easy, right? I know. I make it look like it's easy, right? Okay. So here's another factor of confluence, the moving average. So when the moving average is trading below the market, right, it serves as a support area. When the moving average is trading at and above the market, it serves as a resistance. So the moving average, we use it as a factor of confluence, which is used as a support and resistance. That's it. So when it's below, it is used as a support. When it's above, it is used as a resistance. So meaning when you see it trading below and we are looking at to buy, that's another factor of confluence, that the market is touched at an area of support. Did you get that? Is that clear? Let me know in the comment section. Is that clear? Okay, I'm moving to weekly. Now, on the weekly time frame, there is no need for you to pull back. You already know that you are sitting at an area of interest, right? We already know that we had the first touch, second touch, third touch right there, and then we had the fourth touch. So what you do, you already know that you're sitting at an area of interest, right? Now, you have to focus on the current price. You have to do what? Focus on the current price. So where is the current price? Our current price is going to be this one. Now, here's the secret. When you analyze the market, just because you are focusing here, it doesn't mean that you don't need this movement. If we were focusing here, how would you find the area of demand or supply? We wouldn't, right? Because we had to go back and look at the previous data analysis as to what happened previously. Now, when the market approaches this zone right here, when the market approaches this zone, look at what happened. So I always love to look at the market structure, right? So here's what happened. So the market was creating higher high, higher low, higher high, higher low, higher high. So this is the last higher high. This is the last higher low. The market broke the structure right here. What is the market? What is the type of trend? Which type of trend is this one? I know it's a downtrend. What is market behavior? What is the behavior of the market that is using here? Yes, it's a downtrend. I told you about 3 types of market behavior. I told you about 3 types of market behavior. Correct. This is an imbalance type of market behavior, right? Imbalance type of market behavior. So you need to be able to understand those things as well. So now let's look at where the market broke the structure, right? So the market broke the structure at this zone, and then they went and create their own lower low, lower high, lower low, lower high, and then lower low. And then after this lower low, because the market has created equal lows, do you remember when I told you about a W pattern? That the market might create equal lows and it might create a lower low and a low. Do you remember that? Now the market has created a double bottom right there. What does the double bottom falls under? What is a double bottom? What is a double bottom? We don't have a lot of time, guys. I need you to move fast. What is a double bottom? If you know what is a double bottom, please write it on the comment section. I'm reading. It's a reversal pattern. Thank you so much, right? It's a reversal pattern which is formed where? Where is the reversal pattern being formed? Come on. At an area of demand, right? You're very much correct. Those things are the factors of confluence that you need to put together in order for you to do what? To find an entry. Because I said to you, when we are sitting at an area of demand or supply, the market needs to communicate with you to tell you if it's going to reverse or it's going to break to the downside direction. What did I say? I said, when we are at an area of demand, You need to be able to communicate with the market if it's going to continue to go to the upside direction or it's going to continue to go to the downside direction. But many of you, when you are sitting at an area of demand or supply, you tend to conclude the market before the market even communicates with you and it tells you what it wants to do. Do I make sense? We've got a morning star on the monthly time frame. Now, on the weekly time frame, we've got a reversal pattern, which is a W pattern. So from the bigger time frame, the market is saying, I'm going to reverse because a morning star is a reversal pattern. Now, on the weekly time frame, the market also says, I'm going to reverse because why? The W pattern is a reversal pattern. Right? Now, let's look at the market structure quickly so that you can understand something again. Now, I said to you, this is a lower low. This is lower high. This is lower low. Now we've got equal lows, two equal lows, right? The market broke the structure because they trade above the lower high. They went and created their first higher high. What is that in terms of the structure? What is that? Talk to me if you know. What is that? When the market is traded above the lower high and went and create a new higher, what is that? Come on, guys. Come on, come on. Change of character, the break of structure, right? You're definitely right. So the structure is broken. There's an uptrend which has been formed. And don't forget, we've got an imbalance which has been left previously, unattendedly. We've got what we call, it's a fair value gap. Now, when the market is broken out of the structure, what then happened? We then want them to come back and retest back into this particular area where they broke the structure. Retest, and then we continue to go up. Now, the question is, how are you going to find the entry right here? Let me hear you. How are you going to find the entry from the weekly time frame? At that zone where I wrote a circle, what are we going to look for? What are we going to look for? Candlestick formation. Correct, Billy. We're going to wait for a candlestick formation. Now, I'm going to drop into the small time frame, right? I'm going to drop to the daily time frame. On the daily time frame, we have an area of interest right here, right? Why am I saying it's an area of interest? We've had multiple touches from this zone, right? We had the first touch, second touch, rejection. This was a false breakout, right? And then third touch, fourth touch. Now we're back into this particular area for the fourth touch. 1, 2, 3, 4, for the fifth touch. This was a false breakout, this one. It was a false breakout. This one. Right? Now, look at this. So when the market comes back into this zone, remember on the weekly time frame, this is a neckline area. This is where the market broke the structure, right? So look at this. So previously, when the market was going up, right? When the market broke out from this particular area of interest, they created what we call higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, and then lower low. Now let's start from here. What type of market structure is this one? We've got three types of trend, right? We've got an uptrend, downtrend. I know this is an uptrend. What is the market behavior? What is the type of market behavior is this one? What is the type of, okay, support and resistance. I wanted that name. This is a support and resistance, right? Now let's look at this. When the market was about to reverse at the top, they communicated. It's just that you don't know the communication, right? They did what? They did communicate. I'm going to prove it to you. I said to you, this is the higher high. This is the higher low, right? This is the higher high. And then this is the higher low. And then this is the higher high. Right? After this higher high, the market went and created a lower low. Why am I saying this is a lower low? They traded below this higher low. If you look at where they bounced at, They broke out, right? And then they went and created a lower high. Then they went and created a new lower low. Lower high, lower low, lower high. What is this structure? Is this a bullish or bearish structure? Is this a bullish or bearish structure? It's a bearish structure, right? Now look at this. At the top, when the market was reversing, there is what we call a diagonal head and shoulder that was formed. Right? There is what we call a diagonal head and shoulder. So if you look at here, so this is the left shoulder, this is the head, this is the right shoulder, right? So this is the high, this is the higher low, this is the high, this is the lower low, this is the lower high, this is the lower low. What is this pattern? It's a reversal pattern. The market was telling you that they're going to reverse back. Where are we going? We're going to this zone. Which zone is this one? Let me show you. Which zone is this one? So the market did what? The market broke out from this point, right? The point that I spoke about previously. They created this M pattern, broke out one, then created a high. They were coming back to this zone before they can continue to go up. Guys, does it make sense or I'm just speaking in parables? Talk to me in the comments. Let me know if it makes sense what I'm saying. Now, let me quickly go into the small time frame again to wrap it up, right? Now, when we come to the H4, we've got an area of interest right here. Right? This particular area previously was used as an area of supply. Market tap, retest, tap, retest, tap, retest, tap, reverse. Right? Now, for the fourth time when they came here, they broke above, and then they came back to retest, and then they continue to go up. Came back to retest, continue to go up. Came back to retest, continue to go up. Now, there is a confluence in this particular zone right here. There is a very huge confluence. Now, what is the confluence, right? Here is the confluence. We also have an area of trend line where the market has tapped into the zone for the first time, second time, third time. So when the market was at this zone here, I told my team, I said, look, what we're going to wait for, it's either the market going to give us a communication that they're going to continue to go to the upside direction, or they're going to break to the downside direction. Now, look at this. Before we even go further, if you zoom in here, we've got a bearish Shama pin bar, a gravestone doji. I meant to say a gravestone doji at that zone. What is a gravestone doji? A gravestone doji, it represents bearish momentum. Right? And what we wanted at that zone, what we wanted from here, we just wanted the market to break out from either above or below. So the biggest mistake that you must never do, you must never tell the market what to do. Respond to what the market is doing. So what I did here, I waited for the market to break out from this zone. Right? I did what? I waited for the market to break out. After the market broke out from this zone, they then created what we call a lower low. Here it was it. They broke, created a lower low, and then came back to retrace. After this retracement, that was the entry for us to do what? To continue to sell. So every time when the market is selling, is going to the downside direction, there's definitely going to be a communication. Let me show you, right? Now, after the market broke down, so after the market broke down from this point, right? They went and created a lower low, lower high, lower low, lower high, and then lower low. So as the market was playing around here, there was a fair value gap which was left here, a gap which was supposed to be closed. That is the reason why the market went all the way to this high. When they got here, there is a reversal pattern that they formed to tell you that, look, we are not going anywhere. It's just, we were just going to close the fair value gap. We're going to continue to go down. What is that pattern? We have an M pattern right here. There it is. Where would have been your entry? Your entry was supposed to be here. You sell and go down with them. Immediately when you get here, there's going to be a communication to tell you that the market is coming back to this zone. Right? Now, when the market was going all the way to this point and then left this particular area of neckline, when they were coming back, they gave you a bearish hammer pin bar to tell you that we are continuing to go down. That is a communication. After that bearish hammer pin bar, because you didn't listen, they came back again and give you another factor of confluence. Remember, we are at an area of interest, which is the neckline, where they broke the structure previously. Because remember, this was the higher high, this was the higher low, this was the high. And then the market broke and went and created a lower low. And then as they come here, they are creating a lower high. And then this is the next lower low. The market went and created a higher high, right? After this higher high, they then created what we call a higher low. And then this is a high. In between of this zone, there is a very huge communication that the market did to tell that I'm still going to continue to go down. But because you don't know it, you're jumping into the market without not knowing what you're doing. You don't know how to communicate with the market, right? Now look at this. Don't forget, we are at an area of neckline, right? I'm wrapping it up. So when we are at an area of neckline right here, look at what we have. Right? We've got what we call a diagonal head and shoulder that the market is forming at an area of neckline from the previous area where the structure was broken. So they created what? They created this diagonal head and shoulder. This is the left shoulder. This is the head. This is the right shoulder. This is the neckline. What would have been your entry? Your entry would have been exactly right here on this bearish candlestick. This is a bearish engulfing with a very huge rejection. Exactly here you enter, you go down with them. That's it. What did I just say today? I told you about an accumulation. The market has reached a point of neckline. What is it that is happening? The market is resting. It's resting. Is there any movement that's happening there? No, the market is resting. You don't know these things. You don't know what is an accumulation. Every time you just took a profit and then you want to execute another trade, you want to buy, you want to sell. Because why? You don't know the language of the market. Where are we? Where are we in this zone? Here. We are at the neckline. Remember from the weekly time frame. Remember we've got an M pattern, which the market broke out from the neckline, and then they came back into that zone, right? This is where the market is creating this whole accumulation phase. We are anticipating a buy from this zone because the market broke the structure at that particular moment. I think I've done my part, guys. There's nothing that I didn't tell you. There's nothing that I didn't show you. But the truth of the matter is that there's more into this. There's more into what I just showed you. I'm being honest with you and being realistic. There's more into what I just showed you. Anybody who have a question, you can ask me a question quickly before I leave. Anybody who have a question, you can raise up your hand and ask me a question. Thank you so much. You can ask me a question. You can raise up your hand quickly and ask me. Guys, I don't have a lot of time, and if you're gonna raise up your hand, please be ready to accept. But yes.
Yes, Nkabuda, do you use a 15 minutes time frame for my entries work?
Yes, I do.
Okay.
Yes,
okay.
I do. Yeah.
Thank you.
Thank you. Kelvin.
Hey.
Okay.
I was just asking you, what about your time alignment?
I can't hear you, bro. I can't hear you at all.
I was just asking, what about your time frame alignment?
Okay, listen to this. Take your note down. Let me tell you. So I use monthly time frame, weekly time frame, daily time frame, H4 to understand the bigger picture of the market. And then I use 1 hour, 30 minutes, 15 minutes. I said 1 hour, 30 minutes, 15 minutes, 5 minutes for entry. So on 1 hour, 30 minutes, 15 minutes, 1 hour, 30 minutes, 15 minutes, 5 minutes, I'm looking for market structure only. I'm not looking at whether there's an area of interest, what type of trend. No, I'm looking for market structure. So the market structure that I must find from the small time frame must align with what I got from the bigger time frame. Thank you. I've answered you. Anybody who have a question before I leave? Bandile, please accept. Yes.
So njengoba lapha 15 minutes time frame you align everything nanjenga like le head and shoulder lelo le head and shoulder le entry yakhona.
Exactly. If you've got a head and shoulder from the H4, you're going to look for some bearish market structure on the smaller time frame.
All right.
So you must not look for something which is against on the bigger time frame.
All right. Thank you, sir.
Sure, Tando. I'm taking the last one. Tando. Okay. Guys, listen, let me leave. So before I leave, a lot of you, is there anybody who's asking me a question? I'm left with 1 minute. Let me leave, guys. If you have a question, the group is open. You can write the question right there. I will answer when I have time, right? So a lot of you have been asking me how much is my mentorship, right? And I haven't been answering, right? So let me tell you, I've got a private mentorship, which is 3,500 Rand. Some of you have seen it on my statuses, right? But I know that some of you can't be able to afford that 3,500 Rand. If you can be able to afford the 3,500 Rand, it's okay. You can join the private mentorship, which is 3,500 Rand. There is nothing wrong about that, right? What is the best time frame? Okay, so if you can be able to afford the 3,500 Rand of the mentorship, of the VVIP mentorship, right? I'm going to do a special for all of you who came from TikTok, all of you who on the 5 days free mentorship, who wants to learn how to trade properly, step by step from everything that I know, right? So this is how much you're going to pay out of the 3.5. But this special is only going to be for the next 48 hours. So if you missed it in 24 in the next 48 hours, you're out. So every one of you who comes from the Zoom is going to pay only 399, right? For that special is only going to be 48 hours. For those of you who couldn't manage to join the VIP mentorship. So there's a group that I'm going to create for you, which I'm going to put you right there. The mentorship is going to be conducted each and every day evening. You're going to interact with me. I hope that was clear. There is nothing wrong about that, right? You got me, right? If you are coming from TikTok, from the 5 days free mentorship, you want to join the mentorship, you don't have the money to pay